Welcome back to another episode of Key Factors Podcast. I'm your host, Mark Jones, and we are powered by ReviewMyMortgage.com, the largest index of mortgage programs nationally. And I think it's pretty awesome that in the industry that I'm in, we get to form relationships, relationships that you never know where they're going to take you. And this guest that I have on today has been on the show before, and just about every single time, there's plenty of nuggets to choose from for you to actually take and implement in your own life. So without further ado, I would like to welcome Dylan Shively.
What's up, guys? Thanks for having me.
Dude? How you doing?
I'm good, man. The energy is kicking in.
It needs to, because for some odd reason, I feel like it's still like 7:30 a.m. and it's not.
Yeah, on Monday.
On Monday, right. And luckily, these things aren't live. But dude, I'm happy to have you back.
I'm happy to be back, man.
There's plenty to talk about. Yeah, there's plenty to talk about.
Yeah.
There's a lot of things that are going on with credit, with debt, with changes to new regulations and bills that are passing, and I want to go over all of that stuff. So before we do, there may or may not be some folks out there that don't know who you are in San Antonio and surrounding, but with that being said, go ahead and let us know who you are, what you're about, where you come from briefly.
Yeah, so my name is Dylan Shively. I own James Warren Group. We are a credit education and repair company. We help people better learn how credit works, understanding the mechanics, how you can leverage better credit to improve the overall quality of your lifestyle, to achieve things like home ownership, buying the new car, managing credit right, paying less for your bills than what you're probably paying now. There's a lot of benefits. We do it all. And it all comes from a base of education. So ultimately what my goal is, like overall, now this gets deep for a second, but overall my goal is to contribute to the ending of poverty through education.
That's fantastic. I mean, and there's a lot of folks that talk about that, but the proof is in the pudding. I mean, you are not only forming a company to do that, but you're following through with what you're saying here. I'm seeing you all throughout the community, giving educational seminars, preaching the good word, as they would call it, and combating all the bad credit. You know, it's just one of those things that I do believe us as consumers are not as educated as we should be, even though the information is there, right?
It's like this. So yeah, I got to sit up for this.
No,
one,
by all means. How do you like the new setup? By the way,
I do. It's a lot more comfortable.
A little comfy.
Yeah. Yeah. The other seats were good, but like they were tough. It's
after
like being
a
in
little
school,
while.
You
Yes.
know? You start doing the little move and stuff.
Yeah.
So here's the thing. This is the best analogy I can give. We're now in this information stage of things. Mm-hmm. Where maybe 10, 15 years ago, you were craving information to try to find out how to do things.
Right.
But in today's day, we have so much information, it's overwhelming. And now you have to dissect the quality of the information, right? Because there's so much of it. And I relay like credit and the information you give and understand about it similar to like getting abs. Yeah. Right. So
okay.
Everybody.
Like 6-minute abs or 7-minute abs?
Like everybody knows, like everybody, does not matter. Everybody knows what it takes to do it in a simple form. Mm-hmm. Not the specific details. Let's keep it generic.
Yeah.
Everybody knows it's diet and exercise.
Right.
And then compound that with consistency over time and you'll get the results.
That's
right?
Absolutely correct.
And so you could get into the details of the diets, whatever, but to make it easy, diet, exercise, consistency, time.
And repeat.
Right.
That's right.
It's the same thing with credit. So there are things that are out there. You got to dissect the information, right? Like the 6-minute abs. I'm not getting abs in 6 minutes, right?
Right.
So like probably not even in 6 months, or I'm working on at least 6 years.
We'll see.
So, but we all know what it takes. But if information was the key that unlocked to give you the things you wanted, mm-hmm. then why does not every single person in the world have abs?
Good point.
Because it's the execution piece.
Absolutely. It's the same concept as going to a seminar, getting all pumped up, mm-hmm. and going home and doing absolutely nothing about it.
Yeah.
And funny thing is, you probably paid to go to that seminar. Yeah. Weird.
Yeah. Go to my class. It's free.
Yeah, exactly. But as we open up this conversation, I want to talk about the national credit debt. It's going nuts right now.
It's like
and
32 trillion.
it's up there. And as it continues to grow, we're in a period where it seems too simple to go about that. It seems too simple to obtain the credit. It seems too simple to put it off. There's too many lenders that are going, hey, we'll give you the money, even though you probably shouldn't get that money. What do you have to say about that? I mean, what are your thoughts? Because this can go down many rabbit holes.
Yeah, I was just going to say that. It depends on what part of that sentence you want me to focus on.
Dissect it, maybe.
So the first thing with how easy it is to get money.
Yeah.
The reason that it's always going to be easy to get money is because there's a profit to be made with selling money. That's why banks exist.
Yeah, you're right.
Right? Their whole platform is to not create this safe space for you to store all your money. It's to have a funnel source for you to put your dollars in that you've earned and paid taxes on so they can lend it to the next person that they're hoping doesn't pay it back. And worst case scenario, they'll cash in on their insurance policy to get the money back in case you need to pull it out, but they lost it.
Man, that's a good, solid point and solid breakdown of exactly what it is.
Right?
Yeah, no, really.
So selling money makes money. And, man, okay. I was going to go down this other college path too to kind of compare
it.
But
we are going to talk about that.
Okay.
We are absolutely going to talk about that. You probably see it up on the screen there, ready to roll. But not yet.
Not yet. So now the second part of that sentence, right? So, as far as like, giving money, it's really, really easy. And just to make sure I stay exactly on that topic, can you just repeat that last part so I can hit?
Yeah. I mean, what the access to credit being so easily, readily available for these folks that, in my opinion, we've got 360 million people nationally, of which X amount are above the age of 18 and able to apply for credit.
Yes.
But how many of them should get credit? I mean, that's a tough question because should it be based on credit score like it has historically, or are we looking at the leverage that they currently have with their debt? But then at the same time, you've got people that are taking those debts, higher interest rates, and moving them into 0% for a little while type situation. So that in itself creates more debt for them to get out of that situation. But in most cases, they don't. Does that make sense?
Yes. So I think what should happen is like, I still think credit scores matter, and there may be some people watching right now to be like, what do you mean it's easy to get money? I've been applying for 87 different things in the last year, and I couldn't get shit.
Yeah.
Right? So please understand, we're not just saying it's easy for everybody.
Correct.
But
now, mind you, there's still someone that will loan you those funds.
Oh, yeah.
Despite your credit score, despite
like
your situation. Yeah, absolutely. There's some, you can go to a payday loan place and they'll lend you whatever the heck you want as long as you can show the income for it.
Right. And give some collateral.
Right. And that's kind of a scary part, Go ahead.
So seeing that there's always ways to obtain money, I feel like in addition with credit, even before you get issued a score, I think it should be taught in school where there is a mandatory test that needs to be passed based on your level of understanding on how to use it.
They do it with first-time home buyers and mortgage.
Right.
It's not a bad idea.
Right. So what happens is this. The first experience a 18-year-old person gets is typically that Capital One card in the mail.
Yep.
Or, they're getting pushed in the office at school when the college people show up to say, hey, you want to learn
t-shirt.
This? Yep. Here's $100K, right? No problem.
True shit,
right?
Yeah.
So that's their first introduction, but they were never properly coached on to understand, does this make sense for me or not? And to weigh out the risk factors.
Yeah.
So I think there should be some mandated test, doesn't matter the state, doesn't matter whatever, that there needs to be proof that there is a basic understanding of how money and lending works,
right,
before they're ever able to get it, no matter what score they would ever generate.
Right. And I like that. Yeah.
So if that were to happen, I think it would save a lot more people, because there are people who legitimately think when they get that Capital One card, this is a free $300.
Right. There really are. And it is lack of education. Naivety, who knows? But there are absolutely folks that get that first one and they screw it up, me being one of them.
Yeah.
Back in the day. It was like, sign up, get your free college t-shirt. Here you go as your credit card. And I'm like, drinks are on me.
Yeah. And I mean, I'll put on a tinfoil hat for a minute here.
I love
it. But the big picture that I see is there's a reason.
Yeah.
If you're going to educate everybody how to not put themselves into debt, well, then you create less worker bees to work at the places to create more employees rather than owners. And like, I could go down
a big cycle right there.
Right?
You're actually, I didn't even think about that, but you're right. I mean, if you look at places that don't have a lot of credit card debt, chances are they're not moving much, if that makes sense. You look across other countries. Don't have much credit card debt, but they're also
don't even use a credit system.
They don't even use a credit system, correct? But they're, I don't know. I can't say progress, but kinda is stag. You go to, oh man, I've been to Spain where middle of the day they just shut down.
Yeah, it's like a 2-3 hour take a nap and do whatever.
They just shut down.
Yeah, that's how
Africa. They straight up take tea time. Hey, we're taking a break. Slow everything down. Yeah. But you look at it and you go, wow, the United States is super, super young in comparison to the rest of the countries that are out there. Now, here's something I just thought of, and it might be outlandish, but it may also be a way to potentially save this credit crisis from a credit card standpoint. And I would think that instead of offering 0% balance transfer cards, do away with that completely. Okay. And only allow them to do it on an installment, 0% installment, whatever it is, for debt consolidation, for balance transfers, for all of that. Why? Because when the debt comes due, that's it. It's structured. This is your installment plan. Whereas credit, it ends up being this game of move it to the next credit card, move it to the next credit card, move it to the next one. And that credit card company is banking on that 100%. They get a 3%, 4% transfer fee and then wait for you to not be able to make the payment. And then it goes off to somebody else. You know what I mean? It's nuts thinking about, but it's like,
but that's what it is. And again, tinfoil hat going back on one more time. Why do you think the revolving debt exists and why your logical solution isn't in play?
Weird, huh?
Because the goal isn't for you to pay it off and not obtain it again.
Yeah.
It's for you to continue to use it. And there are benefits if you use it the right way.
They want you to be stuck on.
But you're not learning the right way to leverage it.
No.
You only look at it as a God forbid backup. So when I run out of money, I'm going to go use somebody else's money. That's what they're saying is okay.
Yeah.
But then this is when the snowball effect happens. And then you hate these companies because they presented you with an opportunity that you took full advantage of, but you didn't have the discipline or the knowledge or exposure to understand, hey, you can use it and it's okay, but here's what you don't do.
I agree.
Right? They make it so easy to get, but why isn't it equally easy to explain the warnings, right? Like when you go buy a pack of cigarettes, right? I mean, I know it's small, but it says warning on there can cause cancer.
You brought that up. So I haven't smoked a cigarette, y'all, in like 3 months. Good. Congrats on me. Yeah, that's right. I'll pat my own back for that one.
Yeah. But you see what I'm saying? Like
I do. I absolutely do.
It's just like the whole big picture is, well, if we help people really truly get out of debt and we educate them to how to prevent it,
where's our margin?
They have no reason to want to go to work. If they paid everything off and don't know anybody, what's their motive to go to work 7 days a week and still work at home after they clock out?
That's so true, because now thinking about it, when you ask someone how you're doing, when you ask someone how was work, whatever the case, it's always, I'm able to pay my bills. Right?
That ain't living.
It's always pay my bills.
Yeah.
Versus working towards that goal or working towards that. You get what I'm saying?
You know where that starts?
Where?
It starts in school.
Wow.
Let's run a scenario. You ever been that curious kid that asked a question outside of, like, let me give this example. So say, like, being in math or whatever, like let's use Common Core math, right?
Okay,
Like that shit makes zero sense to me. Like the math we used to use still works today.
I agree.
Right? Like it worked this far ahead.
2. Yep.
Why does it have to be, 1 + 3 - 2 in this and some parentheses and fucking, when did the alphabet get in it?
No clue.
Anyway, so let's say you just don't understand why the teacher is teaching you a certain way.
Mhm.
Have you ever asked a question or done it differently and they told you no? Like they don't allow you to like, no, we're not going to do it this way. I told you this is the way to do it and you have to follow.
Right.
Well, those patterns and habits get created into your brain because what also happens at work when you want to go against the grain or do something different? You follow suit of what management tells you to do. You don't ask why we do it this way. You just do it that way.
Mm-hmm.
So you're getting taught that in school to get those things inbred into you.
Yeah.
To say like, look, you don't ask questions, you just do. Because at work, you don't ask questions, you just do.
Wow.
So they're preparing you for that worker bee lifestyle. And then they tell you, you buy the home, you get the car, you get the white picket fence, and you go have kids. Right? And that's the dream. All of those things that you get cost a lot of money. So what do you have to do to obtain those things? You have to work really, really hard.
But you know what? We'll give it to you now, and then you can go work.
Exactly.
Wow.
So we'll give you a little taste of it. Do you want it now rather than later? Because we created this drive-through lifestyle to where I can get my food in 2 minutes. And I know it's bad for me. It can cause heart failure, cause me to gain weight, increase my cholesterol, hurt my blood pressure. It can do all these negative things in my body, but I'm hungry. And if I can get it now and it's cheaper than the healthy food, I'll go get it.
That is so true. Now, super side note, as I like to do, driving through the drive-through this morning of Whataburger, I'm thinking to myself, isn't this supposed to be fast food?
Yeah.
It's not fast food anywhere you go.
Nope.
For some odd reason, they should just call it food.
Yeah.
It's not fast food anymore.
Yeah.
So anywho, that's super side note because I'm ADHD, DDDA, whatever.
Same. That's why I drink energy drinks. It brings me down.
Likewise.
Yeah.
So, I mean, that's a lot to swallow there for someone that is going, wow, how did I get into this situation? Chances are you knew every decision that you made that put you in that situation, but you're now looking to blame someone.
Mm-hmm.
Let's say you're looking for solutions to the issue. Different story. I think if someone is seeking solutions, ways out of debt, what are some things that you could not necessarily offer, but recommend for them to do? Let's say they don't have bad credit. They just have high debt. So the simple answer is always, we'll pay off your debt.
Yeah. And, and they're like, well, duh, I would have did that if I had it, right?
Exactly.
So here's what happens. This is kind of the reverse of the snowball. So usually when somebody has a lot of debt, and it's usually their revolving accounts, right? Their credit cards.
For the most part, you're right.
So, and credit cards hold a 65% influence of your score going up or down. So this is why it can hurt you so bad. But the good news is if you can find a solution to satisfy that debt one way or another, which we'll give some recommendations here, but if you can do one way or another, you can go back to where you once were, if not potentially better, as long as you're not missing payments along the way.
Right.
So the current thought process is as you increase the amount you own revolving, well, now your minimum payment increases too. And as that minimum payment increases, now it becomes harder to pay.
Right.
And that is that snowball, right? So you can go to somebody for a debt consolidation loan. You're going to pay pretty high interest for it, but I can guarantee it's going to be lower interest than what your credit cards are.
Right.
You're not going to pay
more easily to manage. Too.
Right.
Yeah.
You're going to pay one place instead of multiple places.
Right.
You're not paying multiple different variations of interest. Right. And like you ever like make a payment and you're like, all right, fine. Finally, I got it there. And then interest hits and it's like you never made the payment.
Correct.
So I get it. Like make the minimum payment if that's the last resort. And the first thing you should do is like ask a friend, a family member, somebody close enough and have all the intent and actually pay them back if you're going to say you're going to do it. Right.
Right.
And then the last resort is if you do have to go to one of those places, this is the one time where it's okay. Like this is the 0.5% where I feel okay saying the only reason a payday loan isn't that bad is if you're in the situation where that is literally your last resort, but you have exhausted all other efforts.
Yeah.
Because if you can make that switch, here's the part 2 of it. People just think surface level. Like if I do this, here's end result. But there's another step after. So let's say, God forbid, you had to get that payday loan. Let's say it was even 20% interest.
Right.
You satisfied it. Well, as soon as your utilization decreases, now your score is going to jump up. Now you immediately go to your bank for a traditional loan to go pay back the payday loan.
Right. Finish
Get it
what
out.
you started.
Right.
Yeah.
Get it out of the way. Now you're at a significantly lower rate. You're back with a traditional bank.
Mhm.
You satisfy the credit card debt. Now you have to have this wild discipline to not do two things. People are one extreme or the other.
Okay.
They're either going to go right back into doing the same old shit because they didn't learn a lesson.
Yep. Habits.
Or they're going to accidentally come across a Dave Ramsey video and then they're going to cut up all their credit cards. And then all the work they just did
Goes to
to
the
get their
shitter.
credit there, now they just created this 400 credit score again.
Yeah.
Right? But hopefully they don't think, oh, I got to go back to the payday person again. Right?
Right. They've
It's
already
like-
learned from that. We're hoping.
Right. We're
Yeah.
hoping they learned from it. But see, that's where somebody, even if it's not me, there should be somebody, whether it's self-taught or somebody they're following,
Mhm.
that they should be learning this information to know what to do to prevent it from happening again.
Absolutely.
It's all right if mistakes happen, and it's good that you're self-aware that you've put yourself in a position. Know that it's temporary. It
Mhm.
is fixable. It's going to take a lot of work, and you have to have the discipline to never do it again. And that usually is easier when you have somebody you're following, right? Or somebody you're
That
learning
sets the
from.
yes, it sets a
that has been
a
there.
path. Absolutely. And I think to add to that would be a lot of consumers out there believe that once their credit is bad, that's it. They're shot. And they also believe that credit repair is a sham or credit repair is not the real thing because my credit's been so bad and I've tried the credit repair, but the habits seem to not change. Regardless, let's say the habits do change, they're still skeptic about their score increasing.
Mm-hmm.
I personally have seen scores go above where they ever were before based on assisting them in giving the guidance,
Yeah.
But because people only know what they know.
Mhm.
And I think with you guys' education that you guys provide, the platform that you provide, all of those things, it allows the consumer an easy way to see that path happening.
Yeah.
Am I right?
Absolutely. I mean, here's the thing. Again, going back to kind of like the gym analogy.
Mm-hmm.
So you could be 500 pounds. People lose 400 or 300 of it all the time,
Sure. That's
right?
true.
It happens,
Yeah.
right? Small percentage, but people do it.
Mhm.
No matter how bad something is, you can come back from it. Because just like working out, it's diet and exercise. Well, with credit, there's 5 factors that influence it. So if you start exercising those 5 factors, mathematically, you will change the score.
Right.
Inevitably. There is no way that if you go from missing every payment to making nothing but on-time payments over the course of time
Mhm.
and using more of your credit responsibly with using your cars but paying them back down and not
Right.
carrying high balances, if you do those things, your score will change because the AI runs and says, here's these 5 factors of influence.
Mhm.
Think of it like, again, in school, you're getting graded, right? And so your FICO score updates about every 30 days because it has to allow for a billing cycle for a credit card that
Right.
updates every 30 days. So in that 30-day window, think of it like attending class. So in that 30 days, this is how much I have to accomplish because by the time I'm getting ready to get graded, I want my grade to be better than what it was last semester
Previously.
or last whatever,
Correct.
right?
Yeah.
So credit can change. It's all temporary. If you continue to do the same things you've always done, you'll always get the same result.
Amen to that.
But
yeah.
if you start doing
And
things
still be
differently,
considered, what is it, insane?
right? Yeah, yeah. Well, if you're expecting it to change, but
Right.
you didn't change,
Amen.
insanity, right? So, but if you say like, all right, I'm ready to commit to this because I know buying a home can help me, or fixing my credit can help me buy a home,
Mhm.
and not only just buy a home, but it can help me get a good deal and get approved,
Right.
right? So that's another thing
And
that
it's
I hate
factual,
that it's
right.
taught. I hate that it's taught that we're just looking for the bare minimum of what it takes to get approved.
It's so true.
That's not improving the quality of people's lifestyles.
That is so true. And when I do the simple credit plans that we do here, I've been working with credit for years. My goal is not to get the customer just to where we need. And
Right.
that's something that I make very clear is yes, it may cost you X amount, but is it really costing you or are you paying back what you already committed to at some point in time? In addition, after this point, the goal is everything else gets better for you as well. You're not just
Mhm.
able to buy a home, You're able to go and take that 7-8% interest vehicle, refinance that.
Yep.
You're able to consolidate your credit cards. You're able to now help maybe co-sign for your kid or what have you to do what they need to do. College, student loans, things of that nature, which we'll get into student loans, like I said, here in a bit. But before we do, what are those 5 factors? And then I've got one other thing that I want to address before that.
So number 1 is payment history.
Okay.
Actually, before I get here, the lowest your score could be is a 300.
Okay.
The highest your score could be is an 850. So on these numbers, we're talking about a 550 point fluctuation.
Yep.
So anybody who's paying attention, write that 550 number down. It is super important for you to know this number. Because now when I go for the points and how they affect, you're going to see how big this is.
Yeah.
So payment history is the number 1 influence. It contributes to 35%. That doesn't sound like a big number. But remember, of 550, 192.5 points is that 35%.
Yeah, it's pretty large.
Right?
Absolutely.
So when your score is being calculated between that 300 and that 850, 192.5 of that is payment history. Number 2 is utilization, your credit card balances, right? And that's 30%. That's 165 points.
Okay.
So just in the first 2 categories, 367.5 out of 550 points are influenced by your credit cards. These credit cards report payment history and utilization.
Absolutely.
Right? So they're the most influential credit product that exists.
So I think that gets misconstrued out there with the information and the things that people discuss, saying that credit card they account for 30%. Well, actually, there's 2 parts to that. Just like you said, there is payment history and your amount of revolving to the amount that you have ability to obtain.
Yes.
That counts for, what was the amount again?
367.5 out of those 550 points.
That's quite a bit that people don't really understand.
That's 65% of it.
Yes. So when you've got a customer that has a 700 credit score and they miss their very first payment ever on their credit card, their score tanks.
Yes.
And it's like, well, I only missed one.
Well,
that's the one that it has to go off of.
So, yes. And to even simplify it, because there's going to be many scenarios people are thinking right now, well, I don't think it's fair that if I make 20 years of on-time payments, my score barely goes up.
Life isn't fair.
This
isn't a fair show, guys. Sorry.
If I miss one payment, why does my score go down 80 points? But if I make another payment, why does it not go up another 80? Well, it's because you've already maximized your ability to contribute that 192.5. That's already maxed out if you never miss the payment for 20 years. But at the end of the day, no matter what scenario and question you ask yourself, I always revert back to the 5 factors because it'll answer every question. And to simplify and put it all in one, your credit score is what's called your risk score.
Okay.
Right? So it's the amount of risk you are as a borrower to a potential lender.
Right.
So, and it doesn't matter, mortgage, auto, whatever, credit cards, lender, right? Sure. Somebody's thinking about giving you their money. There are 5 things that they're worried about. And if you've been good on all of these things for 20 years, that's great.
Yeah.
But if you all of a sudden mess up on one, that is a new red flag or indicator something just changed in their financial situation. So the score goes down because the risk went up.
Absolutely. Same concept, I would imagine, and you correct me if I'm wrong or educate me, of someone that doesn't utilize their credit anymore. Let's say they once upon a time had an 820, 860, 850 credit score and stopped using it. All of a sudden, it goes away. They go to apply for or co-sign for or what have you. And they're like, what do you mean I don't have a score? Well, if you don't use it, you do lose it.
Yeah.
Absolutely.
Yeah. So, and here's why. Because some people may be like, well, that doesn't make sense. I've never screwed anybody over. I borrowed all this money before. Your credit score is your risk score. So if you stopped leveraging other people's money, there is no new updated data showing your ability to borrow money.
Right.
It doesn't matter what you did then because you're asking for the money now.
Absolutely.
So they need to know what you're doing now.
Yep.
Right? It's just like, again, I can make so many like fitness comparisons. You know, it's like when we were all 18 or 19 and in the absolute best shape of our life, and you could do one sit-up and have an 8-pack, right? Like it was so easy.
Yeah.
Well, then you're 35, 40 years old, and now you're going to do it again. You do one sit-up and you're like, fuck, I'm still fat. Right? What happens when he's like that?
I need a nap.
Right?
Yeah.
So what happens is when you stop using it, you literally do lose it. And it becomes harder to build the longer you stop doing it because your score is your risk level and it needs data to generate and assess based off the 5 factors. Where do you score? Right? If you stop taking tests, do you have a score?
No, you're exactly right. And I mean, it reminds me of, what is that? Along Came Polly, where he's doing the risk assessment on the different people and whatnot.
Yeah.
But he has only what is presented to him plus the history to go off of.
Right.
You know, and he's got to make his decision based off of what just took place. You just jumped off a building.
Yep.
What do you think your risk level is going to be?
Exactly.
That's the concept.
Yes.
It
Exactly.
makes perfect sense. And I like the way that you explained it.
Thanks.
So that was 2 of them. What are the other 3?
So then you have length of your average age of open accounts.
Okay.
So let me make sure I'm very
you were
detailed.
going to say
on
something
this.
else. I was like, well, not here.
Not this podcast.
Not this podcast. Okay.
So it's the average age or length of how long you've been managing credit. That's another 15%. So here's the analogy I like to give. Let's say one of our crazy Texas thunderstorms happen. You know, it's pouring down rain and all of a sudden your roof is leaking. Well, you say, all right, well, can I fix this myself? I don't know. Man, this is actually getting a lot worse. Shit, I better call somebody. You have 2 people you can call. The first company that you call has been in business for 5 months. The second company has been in business for 5 years. Without thinking about it, who do you want to call first?
The company with proven longevity reviews, 5 years.
Right.
For sure. All day long.
Naturally, right away.
Yep.
Because we feel more comfortable with the person who's been doing it the longest because we feel they have the most experience and we want the most experience as long as we can afford it on our roof.
That's so true.
Because our roof is special, right?
Yeah.
Well, when somebody's looking at 2 people who want to buy a home, if the first person has only been leveraging and using their credit for 5 months and the other one's been perfect for 5 years, that's a lower risk. So they're going to take the person on for 5 years, even if this person has a better score because they haven't been using it as much. So there's no stability or longevity, enough data to assess to say, can you be stable with this?
Right.
Because a commitment to a mortgage is 30 years.
Right.
So they need to see stability, which is another reason why you need the 2 years of income. And I know it's different loan programs.
No,
whatever,
but you're exactly right.
You know what I mean?
Right.
So
yes.
like they need to see
and
stability.
to compare that, okay? And you mentioned that's why you need certain things. Going a traditional loan program, conventional, FHA, VA, they do require the 2 years history. Now, you can find lenders like us that have brokered programs that will allow you to do with less. They'll allow you to do bank statement programs. They'll allow you to do cash flow analysis to use as your income. But keep in mind, you're going to be paying a higher interest rate for that.
And why is that?
Because it's a higher risk. I mean, at the end of
There
the
it
day, risk, reward.
Right.
And what's funny is, I mean, I can't even leverage it this way, but investors see that as opportunity, whereas consumers see it as this big downfall. Oh, I'm not going to be able to get this house because it's a higher interest rate. That's just not the right thing to do when they miss the whole concept of you're a homeowner. You're putting money into something versus back into shit.
Yeah.
You know?
And here's what happens with that. Everybody has their different terminology of how they want to position, like, don't worry about the rate, essentially, right?
Yeah.
So it's like marry the house, date the rate. I've heard like all types of things like that. So, but the concept here is if you don't have the asset, you'll never have the ability to refinance and get the rate that you want.
That's true.
Right? So
That's true.
you have to, at the end of the day, have the asset in order to have the control.
Right.
So from the consumer standpoint, you know, I don't want to pay 6%. I totally get it. But how about you get the asset and then whenever rates change, because we know those will fluctuate more than home prices.
Correct.
Whenever it becomes feasible for you, go ahead and refinance because you have that opportunity to do so. But you can never refinance something you don't ever initially own.
God, that's so true. And we say this so much, but I think it needs to be like a national alert, which is you pay 100% interest on renting, period. At the end of the day, you can utilize your home as an avenue to pull funds down the road. You can utilize it to leverage. You can utilize it to build a mini empire. I mean, there's so many different things that you can leverage your home with that folks don't really grasp because they're in the right now.
Exactly. And they come from a consumer standpoint of they want to consume everything but the information.
Correct.
let me rephrase. There's not people that don't want to consume the information. They don't have the access or the exposure or somebody to show them the path.
Yeah,
right.
Absolutely.
And when you do come across some of those people that do know what they're talking about, that they've been down the road, right? Because you can't give what you don't possess. If you've never done it, I don't think you should teach it.
Right.
Right.
And,
Because you can't.
I always
right?
say you can't lose something you never had.
Right.
Mhm.
So like they hear some people, and again, we're in the information era now.
Yeah.
So it's so hard for them to properly dissect because the people who know what they're doing make it sound really simple because at the end of the day, it is.
Right.
But on the tinfoil hat again.
No, I
So
get what you mean. Go ahead.
On the lower income level where they are intentionally trying to restrict you from gaining access to learn that buying a home increases your net worth and you can leverage the equity in the home to go do other things, like all these benefits,
Mhm.
that stuff gets restricted from a lot of people.
Yeah.
Right. So now the problem then lays, they don't want to pay attention to the person that is explaining it that may have done it. And they're in that position they want to be because they make it sound so simple because everybody who's telling them they can't do it, it's for a reason. No, you can't go do this because if you do this, how are you going to work for me?
That's so true.
Right? They're not going to say that though.
We were talking about this with Robert and Stephanie a couple days ago, and it's just a poor man mindset.
Right.
Truly. And once you get stuck in that, you're stuck in that. And
right.
Until something catastrophic happens, or like you said, unless you see someone that is almost at the same level as you actually make it happen, then you believe it's possible.
Right.
But if that doesn't happen, what you see on TV, what you hear in podcasts, what you hear on the radio, things of that nature just don't seem like it's realistic. It's just not feasible for me. That's the mindset that they would take.
It's like, oh, that's for the other people.
Correct.
Right? I'm not the person who gets that stuff.
When in actuality, credit scores don't judge color. They don't judge race. They don't judge. Now, you got to have a social security number. Yep. But at the end of the day, they don't know you other than your name, social. That's pretty much it. And your credit history.
Right. Because let me tell you, they do not care what color you are. They don't care how old you are. They don't care what your belief system is.
Right.
If you borrow money from other people and you always pay it back on time and you actively use it, you will be granted access to more money.
Yeah. Yeah.
Right. Like it doesn't matter. There's these like filters that people put on, and it's not entirely their fault. It's who they talk with every day and the things they're consuming. Right. Mm-hmm. What are you putting into your brain? What are you watching? Right. What are you absorbing? What are you believing in? And who are the people around you that are telling you, like
all
some people
crap,
are going to say all this stuff. And now you're like, well, yeah, that's for the other people. That's not for me. How the fuck do you know? You never tried.
Right.
Like what happens if you tried and you won? Then what?
Mind blown. Life changed.
Right.
Who knows? Now it's being passed on to the next generation and the next generation.
Right.
And all of a sudden, we don't have this misconception of, well, poverty is going to remain poverty because no. You can totally break out of poverty.
Absolutely.
Come on now.
But it starts with you.
It starts with you. God dang, that's so powerful right there. In itself, it is very powerful. I basically say there is no try, do, or don't do.
Yeah.
Now, I mind you, deep down inside, I really know that there is a try because it starts with try to do.
Mm-hmm.
The don't do is the try that gives up, honestly. So I think folks out there need to know that trying something that is intended to better themselves, better their future generations, etc., is worth a shot regardless of if you think it's true or not.
Right. And here's the thing. Let's say you try, because everybody does the what if, right? Like what if it fails? What if, right? You're already in a bad situation. It's not going to get worse. So like
we were just talking about this.
Let's say you go and you try it and you fuck up.
Yeah.
You know what happens? You're in the same position you were minutes before the fuck up. Right? But if it goes through and it's actually something different, because here's a part 2 to it. So if you can make yourself believe in you because you did it and it worked,
right?
You develop this confidence, right? Yeah. Because confidence comes from doing the things that you tell yourself you're going to do. And most people are not confident in themselves because they've committed to things and they've always dropped the ball.
Right.
Again, bringing it back to fitness, diet and exercise. They sign up for the gym membership and they go for a week and then they get sore and then they're like, I'll go tomorrow and then next Monday and it's next year and my New Year's resolution and they never do it, right?
Right.
So you lie to yourself all the time when you commit to something and you don't do it. And this ties into the finances and credit and your ability to change how you live. Because if you're doing it on those small things, you're telling yourself the same thing when it comes to getting a credit card. Well, my parents told me it was bad, and so I'm not going to use it because my parents said it was bad. Well, it's because your parents never tried to use the benefits of it, truly understand it, and they couldn't teach you that. Does it make them bad parents? No. But at the end of the day, if you just take what they say and you don't try it, you're going to live the same life that they do. And with all due respect to your parents and your elders and whoever raised you and whatever, look at their life.
Yeah.
Do you want to only go there?
Right. No, you're not wrong. I mean, we
You know
were,
what I mean?
we were
Like-
literally talking about this concept on another episode. And the idea behind credit, I don't know how to put it in a way that doesn't sound, I don't know.
Offensive?
Yeah.
You have a sensitive following?
No, not at all. Not at all. I mean, obviously, you know.
Yeah.
It's just one of those things that
Sometimes you have to be really offensive in order for it to click. And it's actually more offensive if you hold it back, and that's the thing
That's
that
so
changes
true.
someone's life.
That is so true. But the idea behind them, well, no, we're gonna skip that. I'm not even gonna go in. I'm not gonna go down
Damn,
that
it's not
road. I'm
bad?
not gonna. Yeah, I'm not gonna go down that road. I'm not gonna go down that road.
All right.
So keep going. We're
All right,
we're at
so-
we're at 4.
Yeah. So anyway, so yeah, you get length of history. Technically, that's 3. So then the fourth one is credit diversity, right?
Mhm.
So it's the mixture of credit. This is 10%, right? So of that 550 number, those are 55 points.
Right.
So it actually matters how you diversify your file.
Yeah.
So if you're trying to get a mortgage, which is an installment loan, and it's a 30-year installment loan, and the only history documented on your credit report says 3 credit cards, you have no experience in the field of installment loans, the ability to take something long-term and pay it back and pay it off.
Yeah.
So that's a high risk, and that limits your ability to increase your score.
Makes perfect sense. And there you have it. Now, I thought about it for a moment, and I am gonna say it.
Nice.
So the idea behind when I have customers that come to me and they say, I don't really want you to pull my credit, but I want to know how much I qualify.
That's factor number 5.
Right?
Inquiries. Yeah.
Inquiry.
Good.
The idea behind, well, I just want you to do a soft inquiry, or can you tell me what I qualify for without pulling my credit, or can you? Chances are you have bad credit.
Mhm.
Why? Because those that have good credit have already experienced the ability to shop for whatever they want
Mm-hmm.
to get the best. And through that process, it didn't affect their score like they said it would in whatever credit score mechanism that says an inquiry is 30 points every time you hit it. That's not the case.
No.
But when you've got folks like that, I think the understanding needs to be, okay, I need to get my credit pulled so that I can see what it takes to get to the next step, to get to the next stage. But if I never do that, I think their mindset is, I don't want anybody to judge me or see my credit score.
Sure.
Because at
There's
the
an
end
ego
of-
attached.
Absolutely.
Mhm.
Because at the end of the day, if you wanted your options, whatever they may be, I mean, did you balk when it was time to buy that car, that Louis on that new credit card that you just got? That, you get what I'm saying?
yeah.
Depending upon what it is, now they're talking to a professional that actually knows what they're talking about, not just offering you money because you have a pulse and a credit score.
Right.
They freeze up. And the idea behind explaining this inquiry thing, I want to hear it from a pro, because I explain it one way and I explain it directly from what it actually is. I mean, inquiries, yes, they're temporary. They don't last long. They're very minimal. If you shop for the same exact thing within a certain amount of time, it all counts as the same nowadays. Is that, I mean, what can you add to that that helps people understand that if you are in a credit situation, you're going to have somebody pull it that's trying to help you. Right.
Yeah. It's, let's say you start getting chest pains.
Okay.
Right. And, it's like those like little quick ones and you're like, all right, I think I'm dying today. Then it goes away and you're like, all right, I guess I got till tomorrow.
It was gas.
Right. So like, but then like, let's say over time it starts to get more serious.
Okay.
Right. And it starts to last a little bit longer. And you're noticing like with certain movements, it's like, man, this is really becoming a problem.
Mhm.
Maybe you lay on your side and you just feel this overwhelming pressure, right? Like it's starting to build up to get worse. And you're like, all right, I got to be seen,
Mhm.
right? I have to. Like, WebMD told me I'm going to die in 20 minutes, and like,
so it's like YouTube
right?
said.
So like,
Yeah.
I better go to the professional and just make sure that they can say WebMD was wrong, right?
Right.
So, and in this, WebMD is Credit Karma. So anyway, I just had to find a way to stab at Credit Karma.
There you go. Jab, jab, jab.
So anyway, so you're like, all right, so you go to the doctor, right? And the doctor's like, look, hey, you got to make an appointment, send us your insurance. You got to fill this out. And we're going to ask you a series of questions because we need to know other things to make sure we don't screw anything up. And you're like, yeah, but like, I don't want to show up to the office. I just want you to tell me what's wrong. Right? So like, I don't want you to like really do the things that cost money. I just want you to tell me what it is without looking at me.
Right. But I'll tell you exactly what's on my credit.
Right. Do you
But I'll tell you exactly what I'm feeling.
Right. Do you get an accurate diagnosis from the doctor at that point?
Absolutely not. Absolutely not.
It's no different.
It's
right?
like trying to get the results of an MRI without the MRI taking place.
Right. So like it doesn't work.
Right.
And I'll give something.
I'm actually going to use that moving forward.
Yeah, go ahead.
That's probably the simplest layman way to compare what we're doing when it comes to credit as opposed to anything else that is of value like your health.
Right. It's like, hey, look, at the end of the day, you have a problem that I'm trying to solve for.
Right.
You don't want to be in that apartment anymore, or you just got a 30-day notice, or whatever your story is. Something just happened in your life where it's causing the move.
Yeah.
And maybe it's something positive. You want to accept a promotion, but you have to be within a certain radius of the building of the new place.
Mhm.
Whatever it is, you have a problem that I need to solve.
Right.
At the end of the day, I'm the professional that understands how to get you there. And you need to understand that I am not judging you. This is not the first thing that I've ever seen like this before.
And he's not Vanilla Ice.
Right.
You got a problem? Yo, I'll solve it.
That's great.
Sorry.
So, you're not looking at it from a place of judgment.
Right.
It's not like you're going to your friend to say like, yo, I got this weird thing I'm going to show you when you start pulling your pants down, right?
That's
like,
funny.
You know what I mean? Like when you go,
I do that quite often.
Right? So like you're not doing anything weird like that, right? If you're in the doctor's office, you feel it's still a little weird, but you feel more comfortable because you're talking to the professional that's going to properly diagnose and solve your problem.
Well, I mean, even put it this way, because using your analogy opens up the door to make it even more clear. A doctor doesn't get paid if they're right or wrong, right?
Right.
A mortgage professional, a realtor, anybody that is trying to help you, a credit repair specialist, they get paid on results.
Right.
So the idea behind it is, why in the hell would I pull your credit, tell you I can do something so that you can just drift off? I never capitalize on what I intended to do there.
Right. Because if you don't close the deal, you don't get paid. So, and here's what happens, like kind of more on the consumer conversation. I don't know if this is given away too much and it gets edited out or whatever, but
I don't edit any of this stuff.
It's like, if you really want to know, you can download the MyFICO app.
Okay.
Right. So let's help people understand, because this can help realtors too.
Sure.
Right. Because sometimes the realtor is the first person who touches the client before anybody.
Right.
Right. So, and you want them to go to.
It used to be.
Oh, you got people coming in
the
like,
way
I want
that
a
we do
mortgage today?
business. Yeah, absolutely.
That's awesome.
Absolutely. I'll show you after this.
I got it. You guys won't know. So what happens is, the realtor's talking with the client and they're like, hey, like, I would love to show you those 27 homes.
Right.
But we need to know how much you can buy so we can make it happen. But I don't want to get my credit pulled because it's going to hurt my credit.
Mm-hmm.
The fact on the inquiries is it's anywhere between 3 to 10 points at most.
Right.
The window of time that you can apply specifically for a mortgage. Now, not just anything, mortgage specifically, you have a 14-day window to where you can get multiple
inquiries
pulls,
from the same. Yeah.
And it'll count as the one.
Okay.
Right. So anything after that, they will, count numerically towards a score.
So now moving forward, anybody that I hear tell someone differently, 30 days, 45-day window.
You're wrong.
You're wrong, and you are lying to your customer directly. Why? Because you probably can go on in the Google machine and ask that question, and it'll give you the right answer. So when you're giving your client the wrong answer, they're going to turn around and Google the same thing that you just told them with confidence, and now you lost their trust.
Yeah.
So one, don't speak if you don't know, and two, listen to this podcast again, press rewind so you've got it tucked away.
That part.
You know?
So, but no, like I've had arguments with, loan officers and stuff like that said, no, it's 30 days. No, it's whatever. Mm-hmm. I'm like, all right, go fucking do it then.
Go do it. Yeah.
Like, go do it and see what happens. And, so like I've gotten screenshots. Oh, well, consumer finance said, it's anywhere from 14 to 45 days. And I'm like, yes, it's for all versions of FICO because we have different versions of FICO based on the credit product you're buying. The one that we
use. And thank you for being specific to that because you're right.
So, for lending, for mortgage lending specifically is FICO 2, 4, and 5, right? And so this is the part where I was like, let me just give it all.
Yeah.
So it's FICO 2, 4, and 5. The only place a consumer can go get all 28 of their FICO scores to see what they are, even in specific to mortgage, is My FICO.
Wow.
Right? So as soon as you open it up, you'll see all three bureaus. And then you say, oh, well, I want to see my mortgage score, right? When you click the mortgage score, you're going to see the three bureaus. You're going to see 2, 4, and 5. Now, how do you pick one, right? For the people that don't know. Well, it's the one that is numerically, not physically. It is the score that is numerically in the middle, right? Is that at mid score? So they take the highest credit score, they take it away. The lowest, they take it away. The one numerically in the middle, so you got a 600, a 650, a 700.
Right.
That's 650. It doesn't matter which FICO and which bureau.
Correct.
It's that middle score numerically, right? So if the client doesn't want an inquiry, here's what happens. A hard inquiry gets registered when you apply for financing and it doesn't cost the consumer money.
Okay.
Right?
Okay.
So that's what registers because your social, right? Now there's a request to TransUnion, Equifax, and Experian that says this social is requesting the full 3 bureau report.
Okay.
Well, what are you applying for? Or why do you need it? I'm applying for financing, right? So they don't know, consumers don't know that every time you pull credit, it costs you money, right?
Right.
So, but it doesn't cost the consumer money. So applying for financing causes hard inquiry. Now, when you sign up for credit monitoring, you're still getting the full 3 bureau report. You're looking at all your scores. And this is why credit monitoring costs money. So when you pay for it on your consumer, right? So you're direct to consumer.
Right.
Now it says, okay, you're paying $40 a month to get access to this for what? Well, they got it from this place that shows it's registered for monitoring their credit. They're not applying for financing. So there's no hard inquiry. So if a client is really caught up on, I don't want to take the ding, but I want to know if I qualify.
Right.
The terminology would be like this, or the word track would be something of this extent. Hey, if you don't want the inquiry, but you're really serious about buying a home, I have a potential solution. Download this app. We're going to download it together. Download this app. And now that whoever's watching this, the realtor, whoever knows how to look at what a qualifying score is, you have to be very careful. But you can say this because it's credit, income, and assets that it takes to approve for mortgage.
Right.
So you go, they download it, they pay the $40, they get no hard hit, client's happy. You look at the 3 scores, you find the one numerically in the middle, and then you be careful with what you say. You say, hey, I can tell you this. I know that based on what this current score says, as long as nothing changes, this is going to open up the conversation that even if you do get that inquiry, it's going to not matter because you have technically a qualifying score.
Correct.
Now, let me disclose the details of your report matter. There's things like debt to income ratio. There's other things. And I'm not the loan officer.
Right.
But I can tell you, I know you were freaking out and didn't want your scores to hit. Well, we avoided the inquiry. We avoided the score decrease. And that's actually technically a qualifying score pending the other things that it takes to qualify.
Correct.
Let me now go get you to my lender so you can see even if you drop 3 points, it's not going to hurt you as far as minimum score requirement.
In addition, if you do qualify, you don't have to re-pull credit unless there's new information on the credit report throughout the process, etc. But that inquiry is not instantly going to show up on your credit. So for example, let's say you are 660 today. You got an inquiry on your credit score from a mortgage professional, and it doesn't automatically go, okay, we've got a 660 credit score, but I've got to lower it to 655 because we just did the inquiry.
Right.
That's not how
and
that
you're
works.
also not the one doing it. But
Correct.
so the way you just explained it is how people think about it.
100%. Yep.
Right. So it's not like the lender's like, let me go register this inquiry and drop their points because fuck the consumer.
Correct.
Right.
No,
like,
that's not how it goes.
Because that would only hurt the lender.
Exactly.
Right. So, the lender isn't the one that is doing this. And remember earlier, I said your FICO score updates every 30 days.
Mm-hmm.
So yes, you will get the alert.
Yeah.
Right away. Right. Like, you ever sat in the car dealership and they promised to only send it to one bank
and it's
you got like 13 fucking inquiries out of nowhere.
Yeah.
But it doesn't change the score on the spot because your FICO score updates 30 days because since credit cards only update every 30 days, everything else has to follow suit.
Sure.
So it will affect you later, but by then you're already pre-approved and under contract and everything there. So it's not a big deal.
Yeah.
The second part of it is the time of how long inquiries affect you. So they stay on your credit report for 24 months.
Okay.
And there's things that not until now, because now there's going to be people that watch this and then say it.
Yeah.
But up until right now, there's no other credit repair companies or whatever that explain it this way, right?
I believe that.
So inquiries last on your credit report for 24 months.
Okay.
But there are things that affect your numerical credit score, and there are things that affect the lending decision.
Mm-hmm.
Those are two different things.
Agree.
Right? Up until now when people fucking steal this. But anyway. So what affects the inquiries affect the credit score numerically,
right,
for the first 12 months.
Are you asking?
No, I'm telling.
Okay.
So in that 24-month period, month 1 to month 12 is when they affect the score numerically.
Right.
After month 12, they have zero impact on the score.
No, it just shows up. We can see what they've applied for, and people are using that to make their decisions. Like, for example, if somebody goes and applies for 15 different credit cards, never accepts it, and then applies for 15 more different credit cards and never accepts it, the credit company looks at this and goes, what the heck's going on here? Right. That is a small factor, but it's something that we can see on our end as to why you're inquiring so much.
I've seen people with over 700 credit scores get denied.
Yeah.
And one of the registered comment reasons is too many inquiries.
Mm-hmm.
Right. And so people think, well, if I'm applying for credit, why does that matter? Why does it affect my score? Because now we're talking about the lending decision.
Right.
So if we just simplify it in, I ask you to borrow money, and then you go look at somewhere that shows everywhere that I borrowed, we're going to pretend it's not a credit report, but you're going somewhere to find out, what have I been up to?
Sure.
What have I been up to the past 12 months? And there's 47 people that I asked for money.
Mm-hmm.
The red flag goes off.
Correct.
And says, regardless if you took it or not, why did you ask that many people in that short period of time? That's the red flag that you're not managing your finances correctly, and you cannot manage this new debt if we were to give it to you. So it increases the chances of you defaulting.
In addition, and you tell me if I'm wrong on this, but let's say you do apply for 10 different credit cards, 10 different mortgages, 10 different auto loans, doesn't matter. But if you don't accept one of them, let's say you change your mind on the whole thing. I don't want to get the car anymore. I don't need the credit card. No, I don't need the mortgage. We see that on our side as you took all these inquiries and were declined. Not that you made the decision not to do it, because you wouldn't have been doing that, going down that path.
Those details don't go in the credit report.
No, they don't. You're right. You're exactly right. And that's something that a lot of folks don't think about.
Yeah.
So 100% don't get your credit pulled if you're kind of thinking about getting the new car. If you're kind of thinking about, if you're applying for something, I think you've already sold yourself that this is what you want to do.
Right.
And that's why if you've got a bunch of inquiries and there's no new debt, we assume that there
also no
is a decline.
Yeah.
Right.
And it's like, hey, if 46 of those 47 people said no,
you're going to be the sucker?
Right. Exactly.
Yeah.
Like, all of them said no for a reason.
Yeah.
I'm not about to find out why.
No.
That's too high of a risk. So
that's right.
So this is why I want to mention, like, because a lot of consumers are going to be watching, and I always hear, like, credit doesn't make sense. Credit's fucking stupid. Well, you love credit when you got your home and when you got that nice car and when you got approved for shit, right?
Mm-hmm.
People only hate credit when they're denied.
Yeah.
So through our education piece, we are teaching people how to stop looking like a risky borrower and to understand what they're doing that puts them at risk and how to change it to be looked at as somebody who gets all of those credit card offers in the mail every single time you get the mail. The reason you get that is because they do that soft pull. They get a little bit of your information and you look like a qualified borrower that they want to give money. You want people to want to offer you money.
It's true.
Right? Because now you're in the driver's seat to say, well, I'm not going to accept that because so-and-so gave me 0% for 18 months instead of 12 months and whatever. So now you're changing the overall quality of your lifestyle, because here's another common misconception that people think, and another thing that's probably gonna be fucking stolen, but you heard it here first. When we're educating people, it's not like, because I've heard people say this, oh, so you're just getting people to get their previous debts deleted so they could get into more debt? Credit repair is fucking stupid. I'm like, seriously, that's how you think, you miserable fuck?
Right.
Like,
right.
Anyway.
You're not wrong. You're not wrong.
So no, that's not it. Right. So we're helping them not only just obtain things if they need it, because credit's not only used for that.
Right.
Credit is also used to, hey, that car that you did buy that you barely got approved for, guarantee you're way overpaying on your auto insurance. Right. And your auto insurance is dictated, one of the factors is your credit score. So what if I can help you pay less for the car and pay less for the auto insurance? And if you're renting, lower your renter's insurance. If you bought, I can help you lower your homeowner's insurance. I can lower your monthly expenses because your score influences those things. So it's not just about buying.
How about the simple concept of I'm obtaining a credit card to earn points, to get something back because I know how to manage my funds now.
Right.
You know, I mean, I've got tons of Amex points that we haven't even used, but I'm responsible with my money, and therefore I don't need to go and borrow when we're in a situation, so to speak. It's more so utilizing it as an advantage, taking advantage of it, capitalizing on what is offered and what I've already established.
Your bank gives you nothing when you swipe with your own money.
No, they call it cash back sometimes, but then it somehow disappears.
Yeah.
Wire fee. I'm like, I don't have that account that charges me for wires.
Or like a convenience fee. And like, who the fuck is it convenient for? Because it wasn't for me.
Thank you. That's pretty good.
You know?
Yes.
Yeah. So there's a lot of things with that. But and I could go down that rabbit hole too. But like, credit is not evil. Credit is not bad. Credit's not the devil, whatever it is.
People are evil.
It is
Y'all aren't evil.
Misunderstanding and misuse of credit.
Yeah.
It is not the credit card company's fault that you decided to start using your line of credit when you ran out of money.
Yeah.
That was the bad teaching of your upbringing and you not doing your due diligence to educate yourself enough to find out if that's the only way to live.
That's so true. It's so true. So that being said, all of that encompassing, again, tons and tons of nuggets that people that should be able to play this back, play, stop, write down the information, and then go and actually practice it. But before we wrap this up, I wanted to get your thoughts and have a little discussion in a short period of time on what's going on with the student loan forgiveness thing. So I've got this stuff pulled up on the screen here, and I just want to look at, it says student loan forgiveness facts, the details explained. So let me see if I can make this
let's learn some facts.
All right. And for those of you that are watching, I'm going to throw this up on the actual screen once we edit it, so you should see it now. It says President Joe Biden announced much anticipated loan forgiveness plan on Wednesday, which included up to $20,000 in federal loan forgiveness for tens of millions of borrowers. The plan also includes extension of the student loan payments paused and proposal for the new income-driven repayment plans. Now, I want to know what the hell is in this thing, what it's about, all that good stuff. At first sight, at first hear, a lot of people are thinking that it pays off all their student loan debt. A lot of people are saying it's unfair. A lot of people are saying, hey, it is fair. There's just a lot of mixed opinions and emotions when it comes to this. And from someone that has gone to college but didn't finish, but also doesn't have any student loans because I paid them off, I've got mixed feelings about it.
Sure.
Truly. I get where they're coming from, why they did it, but does it not also devalue the actual going to school, obtaining the degree, etc.? But then at the same time, you look at other countries and it's free to go to college.
Right.
You know, so there's a lot there. So let's see what the hell this thing is all about. Who qualifies for the student loan forgiveness? To be eligible for forgiveness, you must have a federal student loan and earn less than $125,000 annually or $250,000 per household. borrowers who meet the criteria can get up to $10,000 in debt cancellation. So right there, I'm already seeing a contradiction, if that makes sense. They said 20,000
Now it's 10.
and now it's 10. Okay. So, and then it also says if you also receive a Pell Grant during your education, you can qualify for
That's
up to
where the
20 in the
20
forgiveness. That makes sense. And those of you that need to know what a Pell Grant is, look it up. Let's see here. What type of student loans qualify? Nearly every type of federal student loan qualifies for forgiveness, including direct, subsidized or unsubsidized loans, and graduate or parent plus loans. Now, I know exactly what these were because back in the day, my parents assisted me in getting these.
Okay.
And then they said, good luck to you, buddy.
Yeah.
And all of the debt was mine, which, in my opinion, did I learn in school? Sure. But I gained more street smarts knowledge because of the things that I was doing. I really wasn't taking school seriously, things of that nature, but that's neither here nor there. And with this, let's see here, indirect or direct. Now, one thing that caught me by surprise here is it says federal student loan, meaning
not the private,
not the private, right? And it's almost like
because the government's giving the money.
It's almost like we're bailing them out with our money that we already gave to them. Weird, huh?
Yeah.
Okay, so let's keep going.
It could get very tinfoil hat real fast.
Yeah. But I think Joe Rogan said it. Aliens are going to save us all.
Hell yeah.
Let's
Let's go.
Yeah. Okay, let's see here. However, it's not entirely clear what might happen to the Federal Family Education Loan, so the FEEL, and Perkins loan that aren't held by the federal government. If your loan qualification for federal student loan repayment or payment pause, they're likely eligible for the forgiveness opportunity. So if you pause it, hey, you're probably eligible. But if your loan weren't paused and are held by a private lender, the Department of Education is currently working with the third parties to forgive your debt. Though this plan hasn't been solidified yet. I thought it was, so it may still be being worked on. I know it was signed. Now it says, how do I know if I have a Pell Grant? We'll skip over that. If you've received a Pell Grant, what if my student loans are in default? Here's a great question. What if my student loans are in default? And the reason why I bring this up is if your student loans are in default, I can't help you with a mortgage until you get that situated. You've got to be on a payment plan for at least 3 months. And most student loan companies, servicers, will not take you out of a default status unless you make the 3 months payment to begin with.
Right.
So just getting that established is I've got to go establish this, make 3 months payment, then go to the lender. But definitely listen to your lender's advice when it comes to that because we're all on the same page. There's no way around that. Let's continue. Where was I at? Default. Okay, so if your loans are in default, you can likely still qualify for forgiveness. If collection activities were halted on your debt during the federal student loan repayment pause, your loans are expected to be eligible for forgiveness. And thanks to the Department of Education Fresh Start program, borrowers have the opportunity to return default federal loans to good standing. Loans that are eligible for Fresh Start include direct loans, federal family education loans, and the Perkins loan that are held by the Department of Education. Bail us out, bail us out, bail us out. That's all I read. Our parent loans,
thanks.
Yeah, right. Our parent loans and graduate level loans eligible? Yes, if they're Parent Plus. Our field loans, let's see here. Forgiveness process, how much debt will be forgiven? The amount of debt forgiven depends on whether or not the borrower receives the Pell Grant. Those who will receive up to $20,000 in debt cancellation. Other borrowers who met the income threshold requirement will receive $10,000. So I think that's a good enough synopsis of what is happening, what the facts are versus what's being thrown around and what's being used to leverage for not the best use of what's happening. JC, you can grab that back. What are your thoughts, man? There's a lot there. Like I said, there's a lot of mixed feelings. I totally understand it, but then you also have the fact that college is so expensive. And is it really debt forgiveness or is it just kind of devaluing education? and a formal standard.
I'm gonna have a
No judgment.
I don't give a shit if
Yeah,
it was.
okay.
An unpopular opinion that probably will get a lot of judgment.
It's okay.
But it's fine because I'm gonna say it anyway.
Let's give him something to talk about.
So the overall issue
Mm-hmm.
is when you first pick this apart, you have to realize you have to detach your feelings and you have to detach the identity politics
Mm-hmm.
that are absorbed in that.
Yeah.
Right. So somebody's reading that, and before any of the details start to matter to them and they read them, they immediately think, well, do I like Biden or do I like Trump or do I hate? Right. So,
Gosh,
and then the conversation goes to, well, who technically initiated this? And do you remember what? Does it fucking matter?
No, it doesn't.
So here's the thing. The first thing about the 20,000, notice it said up to.
Right.
And that up to proved itself right when the very next thing was 10,000.
Yeah.
Right. So it looks like a contradiction initially,
Mm-hmm.
but technically they could say, well, up to, we did tell you up to, but you didn't look at up to.
Right.
You looked at the dollar figure, thought, how much do I have and how does this benefit me?
Correct.
Right. And then do I want to, love this because of who initiated it, or do I want to hate it because of who initiated it?
Right.
So you have to take all of those things out of it because we rely too much on external things for us to make
influence us.
decisions.
Yeah, absolutely.
Right.
Yeah.
So
let's take politics
that
out of it. 100%.
all that shit out because
Absolutely.
I don't even follow.
That's why I
like,
just want facts, regardless of whether the first picture that popped up is a picture of Joe Biden.
Yeah, it does not matter. Like it doesn't, because at the end of the day, not that I've been living, like 50 years or whatever, but I've been living long enough that there's been multiple presidents through multiple cycles that none of it has impacted my life directly.
Likewise.
The only thing that has ever changed my life and the course of it was me.
Mm-hmm.
Right. So let's go there.
Okay.
So sure, if you did what you were supposed to do and paid your student loans off before this existed, it doesn't matter what your feelings are. You fulfilled your obligation.
I agree.
Right. And would it have been nice? Sure.
Right.
But it doesn't fucking matter what would be nice because it already happened and you can't reverse time.
And I'll give you an example. Back in the day, our parents used to be able to drink at 18.
Mm-hmm.
We can't drink till 21, right? Just because that, how can they go backwards to change things? Things evolve, things get implemented. And I believe intentions are very good.
Yeah.
I actually am not upset about it, even though I've already paid my loans off. I also see it as a way that, like I said, devalues the actual education piece, the formal education piece to it, because it's already so expensive. Because at the end of the day, is $10,000, $20,000, either way, going to change the life of somebody when they've got $100,000, $200,000 in student loans anyway?
Right. It's not.
Did it help?
Right. It's not going to.
No.
Right. So it's the same of like homes used to be $40,000 at 12% interest.
Mm-hmm.
Right. And now they're, what's the average now? Like
320
or something
like that, yeah.
So it's the average is 300 something thousand and it's at 5 point whatever. Right.
Right.
So, and that's always fluctuating, but times have changed and it's not going back.
Mm-hmm.
Right. So we have to get out of the, man, why didn't this come out, when I was doing it? It doesn't matter. If you were focusing on being the best version of you and contributing to your family and increasing your credit and changing your lifestyle and doing all the things to move yourself forward, you wouldn't care about what's happening here.
Right.
Now, there are some people that may have just 10,000 left or
Sure.
just 20,000 left. And that could make or break the difference of them qualifying for a home because it no longer exists.
100%.
That's great. I think there's benefit to it.
Yeah.
If all of the emotion gets taken out of it, why do we care so much about what's happening for other people? That part in me, and I still sometimes do it. I'm not perfect. I'm not saying like I'm this perfect person, but I really practice every single day to sincerely not give a shit about what happens externally outside of my control.
Absolutely.
Because if that helps somebody, great.
Mm-hmm.
If it changes their life, great. If it barely changes their life, but it puts a small little dent in it, great.
I'm all for it. Yeah.
Stop bitching about, why didn't I get it? Well, be happy you didn't get the fucking handout because look at the previous handout people got and how we're paying that shit back.
That's so true.
Right? So don't look for a handout. Do shit yourself.
That's so true.
Right? So
and I feel the same way about that. Having, and I wanted to paint that picture in the beginning because without giving that picture, you would think I thought this way about all things. But no, man, I think it's a great thing. Even the person that sees the broad spectrum of things, other people in different countries don't pay for this education. We've already paid for it and paid good money for it and paid it back. So we did our debt and fulfilled our obligation, but you're now giving it to people just because. No, I'm good with that. It's not just because. It can help everybody, even if it's just, like you said, a very small amount. And every little bit counts, in my opinion. There's a lot of things that are attempting to be implemented to bring the lower middle class up, but at times I feel it's almost a facade to shield them or shift them away from what's actually being happen to push them down. So
all the time.
And it's kind of a contradiction, not necessarily a contradiction, but a press.
You know who benefits more?
Who's that?
Who issued it?
Oh, Biden.
Overall, we'll just put the term like the government on it, right?
Yes, 100%. So, it is intended for getting points.
What's the first thing you mentioned when we started this? What did you ask me about?
Oh shit, I don't remember.
The national debt?
Yes, the national debt, 100%.
Right? Well, what contributes to the national debt? The federal student loans that nobody's paying, right?
I think it's the largest.
So now if you're forgiving a huge portion of it, it looks like the national debt has now decreased.
Correct.
Right?
When we just moved money on the balance sheet.
Right.
That's all it is.
Right. And if you think about it, in most business structures that don't essentially have a cost attached to it, if you're making up a number of what something costs, and like you didn't really lose money if it didn't cost you money. You see what I'm saying? Like,
absolutely.
If you're selling something for $20 and it costs you $10, well, then when you forgive it, you lost $10.
Right.
But if it didn't cost you anything to give that $20 out, well, then when you're like, hey, I'm going to forgive everybody who didn't pay it,
right?
You didn't lose anything.
Same concept with property values, and people are going, oh, it's crashing. Well, should it have been that high to begin with? And how do you actualize something that you haven't cashed out anyway?
Right.
And you can't lose something you never had.
Right. And the reality of the world is things are always going to go up and go down.
Always.
Right. It's always going to fluctuate.
Yeah.
You know, and we came from a time of seeing the best of what it's going to be up until this time. Right. As far as like, if you were a seller, you were cashing out.
Right.
Right. And now it's going to switch a little bit, but that's okay. I mean, I like the normalizing term more than anything.
Absolutely. Especially being in Texas, but we won't go down that road. That's another
state specific and whatever.
Yeah, man.
But overall, like with the student loans, with everything, if I can just put a bow on everything, if you spend as much energy and effort on yourself as you do worrying about what other people are getting and other incentives and other whatever, and worry about why you didn't get it, that's why you're losing. Because the people that are really winning and excelling at life, that doesn't matter.
Agree 100% with that.
If you care more about clapping for other people when they get their wins and being genuine about it, if you're doing everything you can to better yourself, to, be a better father, a husband, a wife, a daughter, whatever, a mom, if you're working on being the best version of yourself and look at how your kids look at you and the example you're setting for them, none of that matters.
I love that. We'll close with that. Dylan, it's always a pleasure having you and having these discussions. We open up doors that I don't think people even knew were there, to be honest. And if anybody wants to get a hold of Dylan, you can probably find him at jameswarrengroup.com.
Yep. Just go to, jameswarrengroupinc.com.
Yeah. There you go. Fantastic reviews, very reputable and national as well.
Yep.
So that being said, guys, I want to close with our key factor. And the key factor of this one is focus on what you can actually control. There's a lot of things out there that are being thrown at you from media standpoint. There's a lot of things that are being thrown out at you, like these student loans, forgiveness, and people are saying, oh, they're all going to be forgiven. Get the facts straight, first off. But in regards to credit, because it is such an important thing to utilize, to leverage, to build your wealth. I mean, there's only a few that can actually grow, build, accomplish their goals without utilizing credit. And I'm talking a very, very select few. The rest of us have to utilize the tools that are there in order to leverage. And in order for us to have those opportunities, we 100% have to focus on what we can control and what we can't control. And the things that you can control, we've talked about in this episode. 100% play it back, write it down, and then go and actually do it. Just like Dylan was saying, you can go to the gym and actually see results, or you can talk about it and watch the infomercials and continue doing what you're doing and rack your brain on why you're insane. And that pretty much sums up what we're talking about here.
Yep.
So that being said, again, I want you guys to ensure that you're focusing on what you can control only. I'm Mark Jones. We will catch you on the next one.